So I see a lot of traders struggle with finding the correct bias, and it is one of the most easiest thing you could do before you get onto the charts and before the market opens. I'll show you guys how I find my bias and get it right 80% of the time, step by step. So let's get started. So first of all, you want to be in higher time frame. If you look for swing trading, high time frame is really important. If you're day trading and if you're scalping, then if you go down to 15 minutes or 5 minutes, that's more than enough to find your bias, right? Because it's a temporary bias. You don't want to stick to it for long term. So however, when we get into the day, we would want to look into higher time frames as well. Even if you're day trading, even if you're scalping, if you're holding, like swing trading. So what I personally like to do is I would like to check on the monthly time frame. So first, okay, let me remove this. So first, in the monthly time frame, we're fairly bullish, right? So nasdaq has been bullish for fucking years, since it's crazy, but since 2000, right? So we've been very bullish on the monthly time frame, so of course we're going to be bullish here. However, we gotta look into our month. So right now it's July, so you want to look into July and see what the price is doing. Now this is one of the most basic way to know your bias. You want to mark out the previous candle high and you want to mark out the previous candle low, and then you want to wait what the next candle does. So in this case, on June, what we did was we swept out the high right here and then we closed below it. So what we could expect is at least the price to sweep out the low of this candle, right? And what makes this a good reason is because we also have an unmitigated fair value gap right here, right, that we could possibly tap into before we want to go up. So you could see the price come down like this, tap into the CE, and then go up, right? So that's our monthly time frame analysis. Now after this, what you want to do is go down to weekly. So if you go to the weekly time frame, you can see that we have a weekly fair value gap that we tapped into, and we took out a liquidity, and then we had a bullish reaction. So what this can tell us is that we have a rejection block here. So this rejection block is a strong rejection block because we swept liquidity inside a fair value gap. So on the weekly time frame, we should look for the price to tap back in here and look for some bullish reaction. I could expect the price to come back to this high. So the monthly FVG down here might not get tapped as well. It might be unmitigated for it to come back later on. Now after weekly time frame, you want to go to daily, right? If you go down to the daily time frame, in the daily time frame we're bearish, right? So since we've been bearish right here, we made a higher high, lower low, lower high, and lower low. So what I could expect is to see some kind of reaction over here, right? If you see a reaction which is bearish, we could expect the price to go way down towards the monthly fair value gap. If we break through this, we could just see us going higher and higher. So that would be your daily analysis. Now for example, if you're on Thursday, if you traded on Thursday, right, what can you expect? We have a liquidity right here. On Tuesday, we did not sweep it, but we are very bearish, and then the liquidity resting right here is ready to get swept because the price is this close. Why would it not sweep it, right? So we also have an order block right here, right? So this is a very strong bullish confirmation that we have. If we see the price sweep this and then close back above, so what we could do is mark out the high of this candle and then the low of this candle. And what this does is that we have a sweep tap into order block and we respect it, and we close bullish at that, not even bearish, bullish. So this tells us that the next day we're going to be quite bullish, at least till here, right? However, we even broke this and went above, so that's great. So if you were trading on Thursday, you would look for bullish confirmations. So once you go down from daily, you want to go down to 4 hours, and if you look into the 4 hour, what do we have? Right here we swept the low, we tapped into the daily order block, and we had a rejection, right? So when we come to Thursday, right here, so we come to Thursday, let's go down to 1 hour, because our 4 hour doesn't have much confluence. There's no proper structure being formed, and there's a lot of wicks, so you would want to go down time frames. Okay, so once we're down on 1 hour, what do we have? We have a fair value gap right here. We want the price to come back here and then reject, but in this case we don't. We left it unmitigated, so we'll let it be for now. So if we go to the New York Open right here, right, on the 1 hour time frame, if we can see that this is 10 a.m. and then this is 9 a.m., we have a small fair value gap right here on the hourly time frame. So we're quite bullish, so we want to see this get respected. And also, mind you, there's a question that I get asked all the time. On 1 hour time frame, you see that the fair value gap is being respected with the wicks, right? If you go down time frames, so for example, if you go on the 15-minute, okay, 15 minutes respecting it perfectly as well. So what if we go to 5 minute? Okay, 5 minute is respecting it perfectly as well. What about 1 minute? Alright, so this is the thing. If you look down into 1 minute, we broke down through the fair value gap, the hourly fair value gap. And does this mean that this fair value gap is invalidated? The answer is no, because this fair value gap that we marked is 1 hour fair value gap. And what do we want to see the price to do is respect the 1 hour price, not in the 1 minute. 1 hour wicks, if you go lower time frame, the wicks are built with bodies, right, as you could see right here. So the main important thing is that if you're marking out a certain time frame's confluence, you want that time frame to confirm it. You do not want something else to invalidate it. Like for example, right now we have a 1 hour fair value gap, and you do not want a 1 minute to invalidate that idea. You want the 1 hour to invalidate the idea. So that's how you can confirm if this got inversed. You want that to be in 1 hour and not in 1 minute. And in that case, what you could want to possibly trade is into this fair value gap right here, because this is our next draw in liquidity for us to go back higher, right? So let's go down to 15 minutes after 1 hour, of course, right? So what do we have? Our 9:30 candle opens right here, and what do? We tapped into this fair value gap as well as a 15-minute fair value gap. So two thing aligns there: 1 hour fair value gap, 15-minute fair value gap, right? So we want the price to come down here when market opens. So we go down to 5 minute, and when we go to 5 minute, we do not really see anything that we like except for this liquidity sweep. Now this thing is already perfect so far. I would have a lot of confirmation already, so what I could do here is mark out the OTE from the low to the high, and we, oh my god, we also have the 50%. This is literally A plus setup. You could just put your long right here with a 10-point stop, right? And then you could target the highs right here, or I could just mark out the standard deviation of the manipulation leg, and then what we could do is target the -2 right here. Now if I targeted right here, which I probably would have, I would have gotten fucking edged so hard, but whatever, man. I would like fucking exit it. But anyways, that's how you can literally catch perfect setups. So this video came from my Discord, and if you guys want to join and be a part of the community, feel free to join. I have the link in the description below, and you guys can ask me what you guys don't understand, and if there's any requests, let me know.